Hey everyone, welcome back to the fourth episode of this mini-series where I compare the core 4 YieldMax funds to other popular income-producing funds to see who comes out on top. This idea was via a poll asked on the channel and voted on by you. With that being said, please keep your eye out for other polls in the future so your voice can be heard. To keep these videos as short as possible, I wanted to cover each of the core 4 YieldMax funds in their own videos. If you missed the 3 that have been completed so far with TSLY, NVDY, and OARK, those will be linked in the description below the video. But now let's look at the last of the YieldMax Core 4 with APLY. A few important things to remember as we look at these funds. In an attempt to compare apples to apples, all of these funds will be compared during the same time frame to check for performance with the dividends being reinvested. The time frame chosen is going to be since the inception of APLY, which is April 18th of 2023, so no cherries were picked in the making of this video. In this video, YieldMax's APLY will be competing against Apple and another 23 of the most popular income funds to see who reigns supreme. Without further delay, let's get into the numbers. Out of the 25 total funds reviewed, APLY came in at number 15 for the best total returns with dividends reinvested since the fund's inception. APLY, along with the other YieldMax funds, have very high expense ratios of 0.99%, while the average expense ratio of the funds reviewed comes in at a still high 0.52%. Like a lot of funds reviewed for the making of this video, YieldMax's APLY does have a nice monthly payout to show off its second-in-class 14.53% dividend yield. At the time of recording, APLY was 19.07% off of its 52-week high, while also being down 0.06% since inception, which comes out to an annualized return of negative 0.14%. Now, of course, I don't want to just leave you with the 15th best performing income fund, so let me tell you a little bit more about the top 5 income producing funds in the same time frame. Coming in at number 5 on the list, we have SPYI, which pays out monthly and has an expense ratio of 0.68%. SPYI does have a current dividend yield of 12.51%, and at the time of recording was trading 7.25% off of their 52-week high, with total returns with dividends reinvested of 3.08%, which comes out to 6.86% annualized returns. Coming in at number 4 on the list, we have NUSI, which pays out monthly and has an expense ratio of 0.68%. NUSI has a current dividend yield of 8.12%, and at the time of recording was trading 9.48% off of their 52-week high, with total returns with dividends reinvested of 6.43%, which comes out to 14.31% annualized returns. Coming in at number 3 on the list, we have QYLG, which also pays out monthly and has an expense ratio of 0.6%. QYLG has a current dividend yield of 6.29%, and at the time of recording was trading 7.58% off of their 52-week high, with total returns with dividends reinvested of 7.5%, which comes out to 16.7% annualized returns. Coming in at number 2 on the list, we have JEPQ, which also pays out monthly and has a lower expense ratio of 0.35%. JEPQ has a current dividend yield of 11.52%, and at the time of recording was trading 5.15% off of their 52-week high, with total returns with dividends reinvested of 8.77%, which comes out to 19.51% annualized returns. Which leads us to number 1 and the best performing income fund on this list since the inception of APLY, which is SVOL. SVOL pays out its class-leading 15.99% dividend yield monthly with an expense ratio of 0.66%, while only being down 3.27% off of its 52-week high. Due to the higher yield in combination with capital preservation, SVOL has total returns with dividends reinvested of 10.34%, which comes out to 23% annualized returns. This is the first video of this series where another income fund actually had a higher yield than that of the YieldMax fund. Not only does SVOL offer a higher yield than APLY, but the returns are also 10.4% better since the inception of APLY, so you get the best of both worlds, more income and more capital appreciation. Now lastly, I wanted to quickly cover the fund that APLY tracks, which is Apple, to see how that one stacks up. Apple came in as the 5th best performer in the group in terms of total returns. Apple has a current dividend yield of 0.56%, doesn't have an expense ratio, and was trading 13.63% off of its 52-week high at the time of recording. Since April 18th of 2023, Apple has had total returns with dividends reinvested of 3.13%, which comes out to an annualized return of 6.96%. At least in the short term, some of the funds mentioned in today's video might be better options than Apple and YieldMax's APLY, not only in terms of dividends received, but also in terms of capital appreciation. I nor anyone else knows how long that trend might last, but it might be worth looking into. If you're a dividend investor that focuses on cash flow month over month, the 5 funds in this video should definitely be worth looking into, as they might be just what you're missing. That now wraps up this mini series where I looked at the core 4 YieldMax funds to see if they were your best option out there for income or if we could do better. Be sure to let me know your thoughts on APLY down in the comments below, and then don't forget to check out the videos I did on TSLY, NVDY, and OARK linked down in the description. Thank you for watching, and until next time, see ya.